Well, happy Thursday, everyone, and welcome to what we hope will be our final frontier for our PPP loan forgiveness webinar today. We are looking forward to sharing some great information with you that will be helpful in getting forgiveness on these PPP loans that we've been trying to learn. On behalf of the partners and our COVID-19 team here at Boyum Berenshire, I'd like to welcome each and every one of you and thank you for taking your lunch hour to join us today. So I want to make sure you know that the information we are giving today and in our blogs is always information that is most current. Things change, it seems to be sometimes by the hour, but definitely by the day or week. So what we go over today is what is current as of now. And with that, I'd like to discuss who we have on with us today of our COVID-19 team. For those of you who don't know, I am Stacy Shaw, the Business Advisory and Client Accounting Services Partner at Boyum, and with me, I have Chris Whittick, who is a tax partner with us, and he will be presenting, and helping with the Q&A will be Randy Feld, one of our audit partners, and Barb Sadi, another business advisory services partner with us, Tiffany Shermack, one of our audit senior managers, Larry Davidson, another audit senior manager, and now we have Nick Swedberg, who's also a business advisory services partner that specializes in restaurants and breweries, and I'm going to kick it over to him. He's going to go over some housekeeping items for us, and then I will be back on for the agenda.
Great, thank you, Stacy. Like Stacy mentioned, I'm just going to go over some very fast housekeeping things. So if you haven't been on our webinars before, if you look at the bottom of your screen, there is a Q&A button, which somebody's already found. That's fantastic. So if you click on the Q&A button at the bottom, that's where you can ask questions as we're going. There's a team of us, like Stacy mentioned, and answering questions live throughout the whole webinar. And sometimes we'll just address your question right there. Sometimes we'll flag it to talk about at the very end during the Q&A, if that seems to be a common theme. And the one item I'd ask you to do is in that Q&A, if you could just briefly look and see if your question or a question really similar to yours is already there. There's a thumbs up button where you can upvote that question and it'll push it to the top of the list. Just a great alert for us to know that lots of people have this, and we'll definitely make sure we address it then. And I think that will be about it. So if Stacy, you want to come back on and kick off the webinar.
Thank you, Nick. And you guys, it's so fun on our side of it. We get to watch all the attendees coming into the room, and it's really fun to see a lot of names that I know, and it's great to have you listening in. So again, thanks again for taking the time to be with us. So today, for those of you who have been following along, there's a lot of similar information that we've had. So Chris and I might speed up through some of it, but do know that everything is on our website. So anything that you wish you had more information on or additional guidance, our COVID-19 tab will have all the previous webinars as well. And these slides and presentation will also get posted up by tomorrow afternoon at the latest. So we'll go through the PPP Flexibility Act again, which was our last webinar, pretty quickly hitting those points. And now the new applications, the EZ and then the long form. We'll actually show you those and talk through them. Go over again the covered period or the alternative covered period, payroll and non-payroll costs, which we have all become kind of experts on that, so we'll go quickly through those. And then Chris will jump into the wage reduction limitation, the FTE reduction limitation, go through the change to the 60% payroll cost limitation, quickly speed through the documentation that's going to be needed, and then go through some closing thoughts and strategies for you. And we'll end with the Q&A like we always do. So to kick off, the PPP Flexibility Act, which got signed into place, was definitely a benefit for most everybody. We now have, if you do end up with any bit of loan, the maturity of that is going from the 2 years to 5 years. And these are for any that were after June 5th, but you can work with your lender to change that if needed. So again, there's flexibility there. The origination period is from June 30th to December 31st. We're going to talk in more detail about this as we go through the program as well. The covered period is 24 weeks, which is going to begin on the disbursement date. Or for those of you who want to elect to use the 8 weeks, you can for loans originating before the June 5th date of this act. The use of the payroll costs, like I said, went from 75 to 60, so there'll be more detail on that. And we have the safe harbor period that a lot of people were going to rely on is now extended to December 31st and also got expanded. So you'll get more information there. And then the payroll tax deferral restriction was removed. So another big benefit for us. And with that, we're going to jump right into the application. You know, that's the biggest piece, right? We've been using these funds, we've got our employees paid, and now what do we do when we either get through our 8 weeks or use it for the 24? We're going to have to submit an application. And we can all take a little bit of a deep breath though, because we have 10 months now after our covered period ends. So nobody needs to be stressed out about this, making it, you know, high priority. There's going to be time. There's probably more FAQs that are going to come out. There's going to be more guidance. Lenders still have to figure out what they're going to do. And there will be a calculation form that we'll complete along with that application. More than likely, everything's going to be electronic, but I'm going to show you what the forms look like. And then with that application, there's going to be this PPP Schedule A that has a worksheet that we use to help us complete Schedule A. And then we have to, again, go through our representations and certifications. And this goes back to what so many people were worried about when all that stuff hit the news with Shake Shack and shoot, should we take it or not? We are doing okay, but maybe not as good as we were. Remember, those over 2 million definitely have more things to document and worry about. Those that were under 2 million, they did lighten that up. So again, it's that economic uncertainty. And during this time of COVID, it seems like most businesses definitely have that. And then everybody can, if they want, fill out demographic info on the application. And again, as I said, we now have 2 applications instead of the one really big one. Good news is we have this 3508 EZ form, and actually the EZ is right this time. It is pretty simple, or the longer form, which will be form 3508 that we'll go through. Information to include on the application, you know, this stuff is pretty straightforward, so I'm not actually going to spend any time on this slide because we're going to look at it on the forms as well. So any questions that you have on this, do ask. So now, how do we know if we can use the EZ? Well, they gave us a checklist. So now we know who gets to qualify for this. And actually on the next slide, we put it in bullet points. So for the ease of who should use the EZ form, if you are a Schedule C and you have no employees, you get to check that box. Easy, right? So you're going to fill out this simple form. For others that aren't a Schedule C or maybe are with employees, if you did not reduce your wages more than 25% for your employees during your covered period, and you did not have to reduce your FTEs and you kept people on, you get to check that box. You then are going to be filling out the EZ form. And the third option is you didn't reduce your wages more than 25% during the covered period, and you were not able to return to normal business activity, whether it's the CDC or health guidelines or OSHA. So we have some other opportunities that came about with this form. So remember, if you are not subject to the wage reduction or the FTE reduction, good news is we have this EZ form now we get to use. So we wanted to show you what does it look like. And this page obviously is very small and it will be included, but we did give you the link as to opening it up yourself. This form says 3508 EZ at the top. The other application, the first page looks the same. So we're only going to have it one time in the webinar just so you get to see, but it looks pretty simple, right? So the EZ actually is. So what do we have to do? On this page 1, we're going to enter in all of our business information that I included on the earlier slide. Then we just have to enter in one line that has our payroll costs. And then there's 3 lines of those non-payroll costs, which we'll go into detail on. And then we have to calculate, did we meet that 60% payroll requirement, which then will allow us to calculate what our forgiveness is. And then it has a second page that again is those certifications that we just need to initial and sign off on. And lastly, if we want, we can fill out demographic information. So again, this EZ, you're not going to worry about the wage reduction, that 25% threshold, or the FTE reduction. So again, less to think about on this form. So the 3508, like I said, looks like that same first page. We also gave you a link to the form here. It's a longer form, but yet still shorter than our first one. We had a lot of pages on the first one. This one has 5 pages. So again, page 1 is the exact same as the other one. Page 2 is the same with the certifications, but then it's going to bring in that Schedule A, which is what we have to use to calculate the information on page 1. And then to fill out Schedule A, we have a worksheet that we have to use to be able to get the information onto Schedule A. And on Schedule A worksheet, we have two different tables. The one table is for employees who we pay less than $100,000 to per year, because again, nothing has changed with that restriction. And then table 2 is those who made over 100,000. So we have to enter that for each employee and then enter that onto Schedule A. And then lastly, the page 5, if you want to enter in the demographic information. We wanted to make sure that everybody who was here knew, should I do the 3508 or the 3508 EZ? So again, how would you know, do I need to fill out the long form? You couldn't check those boxes that we talked about on the EZ. So really, if you are subject to the limitations for the wage reduction, which is that 25% or more, or you had to reduce your employee head count or that FTE count, you need to use the long form. And now what does it mean for us with the 24-week covered period? So before we were all worried about this 8 weeks. Well, we got more money than we needed, and so it was hard to use it in the 8 weeks. We still hadn't brought people back on. Good news is they pushed through this Flexibility Act and got us to this 24-week covered period. We can still use that alternative payroll covered period as long as we are paying biweekly or more often, so that we're just aligning with our payroll dates. But really, I don't think we're going to need that, because for the most part, all of your payroll companies that you're using, they're setting up payroll reporting to make sure that we get the right data to turn in with our applications. So again, we have options, 8 weeks or 24. And a lot of people are like, which do I want to use? For the most part, I think the good news is it won't matter that much, and we'll go into that in more detail. So what are these payroll costs that we talk about? Again, nothing has changed with these, so we'll go through it pretty quick. It's the compensation that you've paid your employees. It's the time that you're paying for vacation, parental, family, medical, or sick leave. If there's any separations or dismissals, you get to include any lump sum payments for that. The employee benefits have to be the group healthcare costs and also the retirement contributions that the business makes for them. And then the state and local taxes, just a reminder on that, that is your state unemployment, not any fees or taxes withheld that you withhold from your employees. So now how do we know, what do we include? Well, good news is paid or incurred. So during now this either 8 or 24-week period, depending on what you decide, it's paid on the day the paycheck gets distributed or the ACH comes out of the account. But it also is incurred then on the day the employee is earning those wages. So if you hit that incurred but you haven't paid it, the good news is they're still letting you include that as long as you pay it by the next payroll date after the covered period. So the compensation that may not exceed the salary of $100,000, we have to now figure out what amount can we include per employee. So before it was a lot lower, and now we have 24 weeks. If we decide to use that, you can count $46,153 per employee. So it really seems in this 24 weeks that you're going to use up your PPP funds. So that's the good news. Make sure you are only including the paid and incurred one time. You know, don't factor them in, double dipping on that. A few changes here. The red, we tried to put red throughout the webinar to make it easier for you. Now for owner employees, it still is that you cannot exceed 2.5 months of your 2019 compensation, or 20,833. You have to take the amount that's lower. And then there are further restrictions now on the health and retirement contributions, which I'll go into on the next slide as well. And for the self-employeds, you get 2.5 months of the 2019 net profit from the Schedule C that you turned in, which is what you applied for. So the good news is there really isn't much you're going to need to do. You'll get to fill out that easy form, turn in your 2019 Schedule C, and should be good to go. They did say now there's nothing that you get to include for retirement or health insurance. And again, that maximum amount would be the $20,833. And for general partners, the calculation stayed the same. So you take your 2019 SE earnings and multiply it by the 0.9235, which again limits it to that 20,833. So now what do we do about ineligible costs and what are costs that are excluded? If you have any employees that you are paying that live outside the US, we can't include them on the form. And then for anyone that is making more than 100,000, we cannot include the wages over 100,000. That's where I was saying we get capped at that 15,153 now if we use the 24 weeks, or you're capped at the 15,385 if it's the 8 weeks. For anybody that had people maybe that got sick or had to go out due to COVID reasons and got the credit early on under that Families First Act, we have to make sure we don't double dip and include those when we do the forgiveness as well. And then now here's the new points again in red. So for the Schedule C owner, S Corp owner or partnership, there's no forgiveness for health insurance. I know a lot of you who are watching that are S Corp owners, that is contradictory. But remember, we have to add the health insurance to box 1 of the wages. So that's why they're just making sure we don't double dip that. And then bad news is no forgiveness for retirement plans for either Schedule C or partners at this time. For our payroll costs, that in the way we're going to calculate this, I'm going to come back to that Schedule A that I was talking about. But again, we're going to be using the worksheets that are Schedule A worksheets for us in the tables. So the first table, again, like I said, is for employees that are making less than 100,000 annualized during 2019. We enter by employee all of their information, their total compensation that we paid them, and then what the value of their FTE count is, which we'll go into detail in just a little bit. And then we have to make sure we include the salary and hourly wage reduction if that applies to them. But remember, we have reduction exemptions and safe harbors. And again, we'll go into detail on those in a later slide as well. So what does it look like? This will be the first time we've seen this. So the Schedule A is up on top here. And then the bottom half is that Schedule A worksheet. And if you run out of room, I mean, a lot of people have a lot more employees than this, then they just want you to attach separate worksheets. And with it all being electronic, my guess is through your bank, it'll just be adding lines to a worksheet. And now table 2, we include all employees that made more than 100,000. And we're going to enter in the same information for them that we did in table 1 and apply the same rules as it relates to the wage reduction or FTE counts. And here's what that looks like. A lot more simple, right? Because that 25% reduction in salary won't come into play since they make over 100,000. So this one looks a little different just because it's got less restrictions on it. So then we got that information in from the worksheet. So we go back to Schedule A, and then line 6 is going to go through some of those other payroll costs like the group health insurance, but make sure you don't include any pre-tax or after-tax contributions that the employees are making. It's only for the employer. Then the same thing as the employer-only contributions to retirement plans. Don't include any pre-tax or after-tax contributions the employees make. And then again, we're going to put that state and local tax. Again, unemployment only. It's not any fees or taxes withheld. And now lastly, we haven't said anything about the owners because the owners have their own line. And obviously, if there's more than one owner, you'll end up putting a schedule together. So this would be the owner employee, the self-employeds that have employees, because the rest would be on the easy, and then the general partners. And again, we talked about this in an earlier slide, but I'll say it again. The owners then are capped at that 20,833 or 2.5 times the monthly equivalent to what their compensation was in 2019, and it must be the lower of the two. No health insurance, no retirement plan contributions for the Schedule C or partners, and then no health insurance for the S corporation owners. So now we keep talking about this FTE. Well, how do we decide what is an FTE? For a long time, we were thinking it was going to be less than 40, but they came out and said, nope, it's 40 hours per week. But remember, we have the base period that we have to use to calculate, how many FTEs do we have? And then we have to apply that then to our covered period. So we're going to use the same calculation for both. And how do we decide, what does each person count for an FTE? We have to take the hours working divided by 40, and then we have to round to the nearest 10th if we decide to use this way. So for 8 hours, you would have a 0.2 FTE. 60 hours, bad news is anything over 40 doesn't count. You would just have 1 FTE. Good news is they did come up with a simplified method, which might work great for a lot of companies. So you will get to have the 1 FTE for 40 hours or more, but then you just get to apply a 0.5 FTE to everyone else that isn't full-time. So a little example, 8 hours would be a 0.5 FTE, 60 only gets to be 1, and then 32 hours also would just be that 0.5. So again, we're just trying to show that you're using either 0.5 or 1. And again, I'll say again, we have to make sure we're using the same method for our base period as we do during our covered period. And then our safe harbor is still there. So we have to just reach the 100% by the time we are ready to submit that loan forgiveness application, which it's still a little bit of an open question out there. But when you're ready and want to submit, you'll have to have reached the 100% by then. There's nothing that says you have to maintain that 100% until year end or the 24-week period end. Or, you know, a lot of people are worried about the December 31st date that got changed from June 30th. So we can breathe a little bit easier there. So what are non-payroll costs? So remember, originally we were at that 75-25, and now the new rule is payroll costs must be 60% of the loan proceeds used. And we are thinking that we are going to hit a cliff effect where if you didn't use at least that, you wouldn't get any forgiven. They got that fixed. So it's just anything short of 60% would just reduce the forgiveness amount. And then the line 2 that we get to include in our non-payroll costs is the mortgage interest that we're using. So again, the loan has to be in place before February 15th of 2020. And then we get to use our rent or lease payments, again, have to be in a contract before February 15th of 2020. And then utility payments for electricity, gas, water, transportation, phone, or internet, again, also having to have been in service before February 15th. So the thing we have to worry about here, and we're going to talk through a strategy, is we have to decide how much do we want to report in our forgiveness when we now have 60-40 based on other factors the business might be going through. So Chris is going to go into a little more detail on that towards the end as well. So within the time allotment, and once we decide what we're going to do for application of forgiveness, we may have you adjust what you turn in. So again, we're always here to help with that as you get to that point. And with that, I'm going to kick it over to Chris now, and he's going to come in and talk about our limitations.
All right, good to see everyone again virtually here from the basement. And so let's talk about the limitations. There has definitely been some new information on these limitations. Unfortunately, not a lot on this first one, the wage reduction limitation. And you can restore the wages. Now you have until December 31st. If you restore people back up to the same level that they were at, then that individual will be exempt from the wage reduction limitation. You can also really look at the individuals and see if they even are subject to the limitation in the first place. So the example at the bottom of this slide, I think, is really a key one. They're saying that if you make more than 100,000 during any one pay period in 2019, not the full year, but any one pay period, then you are not considered. So usually the businesses that have an issue with this wage reduction limitation, they have a bunch of people that are on commission, salespeople or stylists or something like that, where they're commission based and their income fluctuates by every pay period. So I really think the bottom part here is the key thing to look at, because if they had one large pay period of commissions in 2019, then it's very possible those people are not even subject to this, and you don't even need to consider them. In addition to anyone who made more than 100 grand for the full year, you also throw them out. And then you're looking at, all right, who's left, who has reduced their wages? And if it's reduced because they have chosen to work less hours, those people also don't count. So I really think it's important to avoid this. And based on what I've seen, the vast majority of clients have been able to avoid it just through pretty natural flow of the business. The FTE reduction impacts a ton more businesses, and this is where we have new guidance, and this is where we have new information on the loan forgiveness applications. So this is where we'd like to spend more of the time going through it. So the FTEs, I mean, a lot of businesses laid people off or furloughed them in March, April, May, and this is going to be a big issue for those businesses. There are exceptions to the FTE reduction, and these remain the same, but this is where we're looking at you've offered to rehire the employee and the employee rejected or declined your offer for any reason. If you can document that, then that individual won't count against you because you offered them their job back and you held up your end of the bargain. If they are fired for cause or they take your job, but then they resign during the covered period or they request less hours voluntarily, those will also not count against you. So those are exceptions to the FTE reduction limitation. There are also 2 safe harbors, and they're different. The wording here can be a little confusing, and I'll probably mess it up as we go, but there are exceptions which always can apply, and then there are safe harbors. And so this safe harbor number 1 is new, and that is, Stacy briefly mentioned it, it's if you are unable to return to the same level of business activity due to like CDC guidelines, HHS guidelines, OSHA guidelines, and this would be stuff like a restaurant where they need to be social distancing inside the restaurant. I mean, I've been to some where they've got every other table, there's a big X on it and nobody can sit there. Well, if you have half of the tables X'd off, you obviously don't need 100% of your FTEs back. And if there are other restrictions on your non-essential business related to the social distancing and the cleanliness guidelines and all the rest, if that's the reason that you do not have those FTEs, then you can certify this safe harbor. Unfortunately, it's new and it sounds great. There's not a ton of guidance around how you're supposed to do that. They say that you're supposed to document it in good faith and make a good faith effort. I don't know how exactly you're to document this. I would be keeping track of all of the local rules and provisions put out by like the governor or the county or the city, and just do your best to document these. A lot of the people, I think, might be able to use safe harbor number 2 instead of safe harbor number 1, and we know a lot more about safe harbor number 2. So let's talk about that one, because I think this one is definitely going to have a very broad appeal and a lot of people are going to be using it. So this is the one which we've been referring to as the restoration of the FTEs. So you acknowledge that, yeah, in March and April, some people were let go, they were furloughed, whatever. If you bring them back and you get back to 100% of the FTE, that's the safe harbor number 2, is that you've restored it by the end of the calendar year. So even for a business that was impacted by the CDC guidelines, if those restrictions are lessened and we're doing the FTE count with especially the simplified method that Stacy went through, I've seen a lot of businesses where even though they have restrictions, they're still able to get back to 100%. And we know a lot more about safe harbor number 2. So if you're getting back to 100% that way, I would lean towards using safe harbor number 2, even though number 1 might also apply, because we just know so much more about number 2. And it's very easy to document that you had the FTEs back, say in July, rather than the somewhat nebulous documentation that might be required for number 1. So this is what the new applications look like, and it describes that safe harbor number 1, and you just check a box if you believe that's what you're meeting. Safe harbor number 2, we're going to go in and we're going to show you sort of how these calculations actually work. And so the portion of the application, it goes through and it asks for, this is your average FTE during the reference period. So those are the periods in time in the past, and there's a couple of base periods, and you can use the lower one. And so that's all the same, and that's been in our calculators for a while. Everyone knows what that is. So you figure out your base period, and then in line 12, they're asking for your average FTE during the covered period. And so if you had 10 FTEs in your base period, and then you're looking at, well, we only got back to 8 on average during the covered period, then your quotient there is going to be 80%. So that's where you're going to have at most an 80%. So they're going to reduce it, but they're only going to reduce it from sort of a base of 100% down to 80%. But then it goes into the next page goes in detail through safe harbor number 2. And I like the way that this was laid out. I mean, this is the stuff we've been talking about. It just lays out, this is exactly what these 5 steps look like. And I think a lot of businesses are going to be using this safe harbor number 2. And so it's only 5 steps. So I just want to show you what they are and just talk through them quickly in exactly the way the application lays it out. So the first step here is to enter your average FTE during this weird little sort of February through April 26th period. And then the step 2 is, how many FTEs did you have on February 15th? So what's going to happen is you're going to say, well, I had 10 FTEs on February 15th, and then I pretty well laid everybody off in March and April because I got closed down. And so then we're going to continue to step 3. And then step 4 here is really the key. It says enter the total FTE as of the earlier of December 31st or the date the application is submitted. And so this is that restoration. And step 5 is just clarifying that, hey, if 4 is greater than 2, you're good to go. You get to enter 1.0 and you're not going to have any reduction. And so it's just showing you the things that we've talked about, where if you restore, and you need to do this before you submit the application for forgiveness, then you can get this 100%, or at least potentially be eligible for 100% forgiveness. And the reason we say before you submit the application, if you submit the application in October and you can't certify that, well, in December, I plan to hire the other 3 people to get me to 100% FTE. You have to achieve the restoration before you can certify that you have, in fact, achieved the restoration. So that's the only thing on the timing. Any time between now and December 31st, you achieve that 100%. And then as step 5 indicates, you should be good to go. You get to enter 1.0 and you follow through the math. And that just means that you're not going to be limited. The 60% payroll cost limitation is more generous than it was before. They've eliminated the cliff effect that we talked about in the prior webinar. So really, this seems pretty easy. If you have 24 weeks, it seems pretty easy that you're going to spend at least 60% on payroll. So I've not really seen very many clients run into an issue with this. The only ones that do are the ones that really want to use the 8-week period, perhaps, and they were really at a dramatically reduced level of activity, but those are certainly rare situations. Here's the documentation you're required to submit with these forgiveness applications. I'm really not going to talk through this. The biggest thing is going to be your payroll reports. And so if you're using a big Paychex, QuickBooks, ADP, Gusto, somebody like that, you're going to be able to print out a payroll report that's going to say it's going to be a PPP loan forgiveness payroll report. it's going to have all of this information. It is going to be laid out in the same way that these brand new loan forgiveness applications are set up. So that's really going to be the main thing for payroll, but you can read through these other ones. These have not changed. We have not updated them. We've really gotten no additional guidance on these. So I think everyone's understanding is pretty clear about what kind of documentation you need for both payroll and the non-payroll costs. You got to prove you spent the money and prove you spent it on the right things. There's a little bit of this other documentation you're required to maintain, but you don't actually need to submit it. And this is going to be your FTE records, especially for that safe harbor number 2 and safe harbor number 1, if you end up wanting to use that. So your FTE documentation, that's going to be on you. You're going to need to keep it, and keep it for 6 years. All of this stuff you keep for 6 years. But it's sort of whatever payroll records you have, do the best you can, and then just be sure. I think the key thing here is just to keep them in a separate file for 6 years, because that's probably longer than you otherwise would be keeping that stuff. So we have a number of closing thoughts and ideas here that we want to go through before we get into the Q&A, and I do think we'll have plenty of time for Q&A. So I see there are some, but if you've got questions, I certainly encourage you to get them in now. So quick review of sort of the rule changes, the highlighted items here. We've got a form 3508EZ. That's great. And as Stacy mentioned, for a Schedule C that has no employees, you should be using the EZ. And as long as the PPP loan amount was done correctly, you will get 100% forgiveness, guaranteed. It's foolproof, because the PPP they gave you for a Schedule C with no employees was exactly 2.5 months of net profit. And now they've said that the forgiveness is going to be exactly 2.5 months of net profit. So Schedule C folks with no employees, it's a slam dunk. I would go ahead and submit those easy applications right now, or as soon as your bank chooses to accept them. Form 3508 has been updated. It's simpler than it was before. It's still a fair bit more complex than the easy form, but it's been updated. As we've talked about the payroll costs, we've got 60% now. The cliff has been eliminated, so that's back to sort of our original understanding when it was the 75% limit. We've got FTE and wage reduction limits. Now you can restore those by December 31st. Or the date you submit your application. You can never certify that you're going to do something in the future. You need to achieve it, and then you can ask for the forgiveness. The FTE reductions or exceptions, those have been expanded a little bit, and those are definitely well expanded from the very beginning. So there's really a lot you can do on the FTE side if you document it on your own. The big things, some of the newer things is the owner compensation. There was question about what the limits would be. Now we know that the limits are going to be $20,833 or the 2.5 months of 2019, whichever is lower. For most of the clients we've been working with, this doesn't seem like a big problem, because if you get 24 weeks for all of the employees, the fact that the owner comp might be a bit limited hasn't really come into play very often. Similar with number 7 here, the health insurance, the retirement plan contributions, for the most part, don't count. And so we had, in the slides, we had details on the Schedule C, the differences between Schedule C partners in a partnership and the S-Corp owners. A lot of that stuff isn't going to count, but once again, we're finding that people are generally well exceeding the 60% payroll costs. They're well exceeding the total spend of PPP money. So I think those rules make some sense. but generally we haven't found them to actually result in less forgiveness for folks. So it's not good news, but I don't think it really is going to affect most situations. So what do we do if you have an amount that's not forgiven? And I think we've talked about this before, and there's been some lack of clarity, and they really have botched the EIDL advance. I think that's a key area of confusion for people. I was talking with Stacy the other day. I think we would both prefer if they had called it a PPP advance, because that's really what it ended up being. That's what they intended for it to be. It didn't really work out like that because it was so poorly administered, but the EIDL advance will result in less PPP forgiveness. So if you got a $100,000 PPP loan and you got an EIDL advance of 10 grand, you should be expecting 90,000 of forgiveness on the PPP forgiveness application. And then you're going to owe the 10 grand, and it's going to be based on these terms. So now we got the 1% interest amortized over either 2 to 5 years, but you can pay these back immediately. If you want to just pay back the 10 grand and be done with it, you can absolutely do that when you submit that loan forgiveness application. So just because you have 2 years and it's 1% interest, that's nice. But you don't have to have that hanging over your head. You can certainly pay it back immediately if you'd like to. There's some other rules about sort of when the payments begin on these PPP loans. Realistically, we're looking at getting 100% forgiveness in the vast majority of situations. You have 24 weeks. We have expanded safe harbors. We have expanded exceptions to the limitations. We've got more generous rules for counting the payroll costs of employees. You have a great opportunity to spend 100% of the money, and you really do have a great opportunity to get 100% forgiveness. There's really nothing you can do about that EIDL advance, but on the rest, if you got it, but on the rest of it, I think aiming for 100% forgiveness is the plan. And so in here, I actually snipped out a part of the instructions, the line 11 that we've been talking about. It says, if applicable, the SBA will deduct the EIDL advance amounts from the forgiveness remitted to the lender. So it's not on the form itself. You enter your EIDL advance at the top in the sort of the demographic information. And so you don't really see it on the application, but in the instructions, it's pretty clear that they are going to reduce, if you had an EIDL advance, they are going to reduce your forgiveness by the amount of that advance. And those advances ranged from basically 1,000 to 10,000 at the maximum. Can you have an EIDL loan in addition to the EIDL advance, in addition to the PPP loan? Yes, absolutely. The EIDL loans got way backed up and they shut off applications. They have now reopened applications. So if you would like to apply for an EIDL disaster loan, you may. It's unclear how much money is going to be left, but at least they're taking applications again. So you could definitely look into that. And if you applied for one before but haven't heard, we're still seeing people get funded who applied like 2 months ago. But I would definitely be inquiring with them if you applied and you have not heard back. There is still some guidance needed. And as Stacy referenced once, there's probably going to be a whole bunch of FAQs. We decided we should go ahead with this webinar despite not having those, because a lot of these questions, although they are interesting questions and they could be important, a lot of times the answers to these questions don't seem like they're going to dramatically impact. We think a lot of times, even if the answer is bad on all of these, I think a lot of people are still in line for 100% forgiveness. So we really wanted to get out here and go through those applications and make sure people understand how they're supposed to work. When can you submit the application is a question. It's pretty clear you're supposed to be able to do it maybe halfway through your 24 weeks, if that's when you've spent all the money and you're in line for 100% forgiveness. In reality, your bank is going to need to accept the application. I think the SBA has made it clear that they intend for your bank to allow that application, but the banks all sort of have a mind of their own. Maybe your bank doesn't allow it, which is going to be fine. I think it's a bit of a bank by bank decision. What does owner employee mean? What about relatives of owners? So there are some questions out there which we would love to get some clarity on, but I think in most cases, even if the answers are sort of the worst case scenario, we're still finding that people are in line for 100% forgiveness. You can still apply for a PPP loan. I suspect you already have one if you're listening to this webinar, but if you have friends or other business owners that don't have one yet, or they didn't think it was a good fit for them originally, I think it really can be, and you just have a few days left to get those applications in there. They were kicking around some ideas of a second round of PPP. I don't know what'll happen with that. I would just say stay tuned. It'll probably be a month or two yet before anything substantial gets passed. And as we've talked about quite a bit, Congress is looking to give you a tax deduction for the costs incurred with this PPP loan. And this is really a key area. It has a big impact on your tax planning. I mean, if you had a $100,000 PPP loan and then got it all forgiven, the answer to this last bullet point, it's the difference of $100,000 in your taxable income for the year. That makes a big difference in your personal tax situation. I mean, it makes a massive difference in what kind of estimates you might be making. And as we'll talk about, I think on the next slide or two here, it can really impact when you want to apply for the forgiveness. So let's talk about the strategies. When should you apply for the application for forgiveness? We've talked about this, and every business is a little bit different. Generally, I think that later is better. I am not in a rush to submit any of these forgiveness applications. And there's several reasons why. And it ties in a bit with number 2 here. Should I use the 8-week or the 24-week covered period? Well, if you ask me, if you wait until week, say 25, then you will have all of the information about how you spent the money during your 24 weeks. And it is only then that you can make an informed choice about if you want to use the 8 weeks or if you want to use the 24 weeks. You can plan on maybe using 8 weeks if you had an early PPP loan and that's what you were planning on, but I just don't see a reason to submit the application in like week 10. I think there's definitely some situations where waiting can be better, and I don't see how waiting would be a bad thing. So there's potential upside to waiting, and I really don't see downside to waiting. We think most businesses are going to use 24 weeks. Certainly there are some in a few situations where you're going to use 8 and those are going to be situations where you never let anyone go. So you kept everyone on and you really were in line to spend 100% of the money in the 8 weeks and you're totally in line for 100% forgiveness. I think those situations are uncommon, but they can use the 8 weeks and come out either the same or potentially a little better than the 24 weeks. But once again, even in those situations, I would prefer to wait until at least week 25. So I have all of the information and I know exactly what happened during the 24 weeks rather than guessing that something bad might happen later in the 24 weeks and you might let people go and that changes your FTEs and yada, yada. I mean, if you wait until week 25, you will have more information. And I want to be making choices with all of the information available. And there's just no reason to rush into that forgiveness application. And so numbers 3 and 4 really get into thinking about whether or not you're going to get a deduction for the PPP expenses. Right now, you do not get a deduction for them. We think it is likely that changes, but when that is, we don't know. Maybe this fall, maybe later this summer. It's Congress, who knows? Maybe this winter, maybe never. And getting an answer on that before I submit my forgiveness application, I think is very, very important. Because if you put all of your payroll on the forgiveness application and then you do not get a deduction, then you do not get a deduction for QBI purposes. And there are QBI limitations based on your wages. So I really want to wait and see so that at the end of my 24 weeks, it turns out Congress changes their mind or they don't get their act together and they don't get a deduction. Then you probably want to put 60% payroll and you do want to include that rent. You do want to include 40% of the non-payroll costs on that forgiveness application so that you're not losing as much of your wages. The same idea applies to R&D credits. If you lose your deduction of the wages for then you're going to lose your R&D credit based on those wages. And so I want to wait and I want to see that I am going to get a deduction before I choose what to put on that application for forgiveness. Because if you rush into it and you're just like, well, I've spent all the money on payroll, I'll just submit the payroll on there. I won't need to worry about the rent and the utilities and all the rest. That sounds easy, but if you don't end up getting a deduction for it, you may have then cost yourself QBI. You may have then cost yourself R&D credits. And so we're back to like, I want to have more information before I submit this application. That's really the key theme here is the longer you wait, the more information you will have. We'll hopefully get an answer on the deductibility of these expenses, and then you can make an informed decision as opposed to a partially informed decision. The FTE reductions, this is something you need to be acting on right now. So the strategy is, we're not sure, maybe you'll want to use safe harbor number 1, maybe you'll want to use safe harbor number 2, but I think in all circumstances, you really want to be documenting all of the FTE reductions. Don't wait until October or December to document that someone voluntarily requested a reduction in hours. Don't wait until 6 months from now to document that you offered them their job back and they declined. Those are the things you got to be doing right now and monitoring that FTE, and that's an ongoing process. I wouldn't wait until the fall or the winter to be doing that. That you really want to be doing as you go. So we are certainly here to help. We can help you with the forgiveness application. I think for many clients I've talked to, they're probably going to fill out the application, provide you some advice or recommendations, especially if you have issues with some of those limitations. For the larger loans, the loans over 2 million, the SBA is going to look at with probably a very fine-tooth comb. But even the loans sort of 1 million and up, we think there's a pretty good chance they'll get looked at. And so you want to be doing a much better job of documenting your eligibility, making sure your documentation is all in order. So I mean, I think we're here to help, but we're here to help at the level, we're going to meet you where you're at. And if you've got a good handle on it and your loan was 50 grand and you've got payroll reports that show you've spent a ton of money, you don't need a super detailed analysis probably. So we're here to help look at it before they get submitted to the bank, because I think that's really what folks are looking for. But certainly anything you're looking for, we've got a great team. I'm sure they've been answering questions like mad for the last hour. So let's see what Nick and the team's got in terms of outstanding.
Thank you, Chris. Sorry, somehow me jumping on cut you off there for a second. Yes, we do have quite a few questions. So Chris, I'll let you take a break if you want to get some water. And I think that's our first webinar where we did not have a cat jump up on the keyboard. So good job keeping your little animal at bay this time. Stace, if you would want to jump on, it's been a while since we've seen you and just wanted to get your opinion on a few things here. Lots of questions on the EZ form. And just to start off, can the EZ form be used if we have employees that are paid over 100,000?
Well, that's a good question. So the checklist makes it a little bit confusing because it talks about that $100,000 limit. And what they're putting on that form is if you have anybody making over 100,000, you're not subject to that 25% reduction. So it does not limit you that you cannot file the EZ. You do have to make sure you can check one of the 3 boxes though. So 100,000 is not a limitation though. Good question.
Great. And can I use the EZ form if I did actually reduce my FTEs?
Well, you can if you can check the 3rd box. So if you have not reduced the salaries, but you did reduce FTEs, but you're able to say that you were unable to operate during your covered period to the same level as before February 15th, then you'd be able to check that box. So it really depends on each business's specific situation as to whether or not they can use it.
Perfect. And a couple of questions on the 24-week extension. First, is that an election? Do we have to go tell somebody we want that? And does that apply? Can anyone elect into it?
So it is we had a lot of loans that came out in April. You know, we were on that so fast, worried about money running out. And so people were running to their banker or calling their banker. I guess no one could go to the bank, making sure they hurried up, got the money. They now in this act that they put out, anybody that got their loan before June 5th can make that election to choose 8 instead of 24. Everybody that are after June 5th are going to be under that 24-week period. And you'll see on the application that you'll check that box for 8 weeks or 24 weeks. And then I'll just kind of feed into that. A lot of people were like, well, what if I want to apply at 11 weeks or 13 weeks? Does that change my covered period to that? No, your covered period is still 24 weeks. You just, when that banker is ready for you to apply when you're ready. And that could be at any time between that 8 and 24. And we hope more guidance comes out on it. But again, there's nothing to stress about or worry about because you get to wait that 10 months even after that 8-week period to decide, you know, what you want to do. And by then we should have the information needed to make really good decisions. And I think, again, unless you're selling your business and you have to apply, everybody else can breathe a little easy.
Great. That's a great start. I think I will have Chris come back on. He is furiously marking that he wants to answer questions, so he didn't want to sit for very long, apparently. Let's see. I think I'm going to start with one that seems pretty common. Is if I go with the 24 weeks and I have fully restored and I'm back and I'm doing good at week 15, but then I need to lay some people off, is that going to affect my forgiveness and then I shouldn't do 24 weeks?
So it depends if you sort of laid people off in the first place. If you are using the safe harbor number 2 and you're restoring to 100%, you can restore to 100% and then subsequently lay people off. That should be okay. If you never laid off anyone, then you need to look at the entire 24 weeks as your covered period. And sometimes those folks might end up using the 8 because they had everybody on payroll for the whole 8 weeks anyways. So if you laid people off and then you have restored, it won't matter if you sort of then let people go again because you get shut down or businesses down for whatever reason.
Great. And if we do elect 24 weeks, that doesn't mean we get to get any more money, correct?
No, I wish that was the case. I mean, what we're seeing is they gave you basically 10 weeks worth of payroll money, and now you have 24 weeks to spend it. So we're seeing projections of you got a $100,000 PPP loan, and we got people on pace to spend $200,000 of payroll costs during this 24 weeks, which is way in excess, obviously, of the money you got in the first place. And that's okay. Realistically, that's going to happen if you're going to use 24 weeks, is we would expect you to far exceed the $100,000 in terms of spending, and you might do it just on payroll alone. So that's okay. And that's why I think a lot of people are in line for 100% of the FTE, or 100% of the forgiveness.
Great. So now with the expansion to 24 weeks, we're kind of pushing a lot of these loans out to the end date being somewhat near our year end. Do we run any reports, or do we worry about when our year end is versus when we're asking for forgiveness? How do we tie those together?
Yeah, that's a good question. I think the motivation here is, I think the strategy, as I've said, is to delay submitting your application for forgiveness, potentially is, until we get an answer on the deductibility. But then I think your goal is just to have the answer on forgiveness before you file your next tax return. So if you're a calendar year taxpayer, you could easily be submitting your forgiveness in like February. That would be fine. Or maybe it's November. We're not sure how long it's going to take to get an answer on those. I mean, hopefully soon, or hopefully it's a quick turnaround of a week or two. But we really don't know. I believe the banks have something like 60 days, and then the SBA has like 90 days to review them. I don't know if they'll actually take that long, but you're going to be looking at, you definitely are going to need to extend your tax return if you don't have an answer on the forgiveness, because it is just based on the 24-week period. And until you get the forgiveness back, these need to be recorded as liabilities. They need to be recorded as loans, and you only get to write them off, which will obviously have a gigantic impact on your on your book income, and probably or potentially your taxable income as well. So you want to get this forgiveness wrapped up before you file your tax return. And if you had like a fiscal year end, that means probably extending that fiscal year end return. I mean, you could have a June 30th year end. You're going to want to be extending that tax return and getting answers on the forgiveness prior to filing.
Very good point. And also a good question that sort of piggybacks on some of your closing comments that you had. If we can get full forgiveness from payroll alone using the 24 weeks, which sounds fairly common for most people we've been talking to, is there any reason to report and dig up the other expenses?
It depends if you can deduct the wages.
Good.
If Congress does not get their act together and you do not get a deduction, I think a lot of businesses are going to have a very strong incentive to see if they can cobble together the 40% non-payroll costs. If you get a deduction for it, yeah, there's probably no reason. You probably just submit your payroll and be done with it. But if you don't get a deduction, I think that's almost certainly not the approach you want to take, and you're going to want to gather those non-payroll costs. The other thing I would bring up is that we're aiming for 100% forgiveness here, and we're aiming for 100% restoration of the FTEs. But in situations where you do not end up getting to 100% FTE, you can still get 100% forgiveness. And you need to go through the math and work through that. But we've really seen that the way this application handles it is different than before. And we can run scenarios where if you get a $100,000 PPP loan, you end up spending 200 grand on payroll, but you only get to 80% of your FTE. The way the math works is they take 200,000 times 80%, and that's going to be 160,000 that you're in line to have forgiven. But you only applied for 100,000 in the first place. So you're still in line for 100% forgiveness. And so that's why we're increasingly seeing that even if you don't get to 100% of the FTE, the way the math works out, because people have 24 weeks and they're way overspending this money on payroll, the way this math works out, you can still be in line for 100% forgiveness, which is great. The math and the example on that can get a little hard to follow in a presentation, so we didn't want to go into all that much detail. But if that's your situation and you're thinking, I might not get to 100% FTE, that does not mean that you're not going to get 100% forgiveness still. So I would take a close look at that.
Perfect. One last one before I have Stacy come back. Can you clarify on the wage reduction? Does that mean if they're like a restaurant's a common one or a salon, if they're just working less hours, or but their base pay is the same?
Yeah.
What are we measuring?
If their hourly rate is the same, they're making $20 an hour, they're making $20 an hour before, and they're working 10 hours a week instead of 30 hours a week, that reduction in hours gets captured on the FTE count. It does not get captured on the wage reduction. So that really, you have not reduced their hourly wage or their salary, you've just reduced their FTE count. So it gets handled over there. So you don't get sort of double whacked by reducing their number of hours, and then you don't have both the wage and the FTE reduction in that case. It's only the FTE.
Perfect. Stace, if I could have you hop back in quickly. And we are, as we expected, there's just not as many questions this time. So we probably will only be going another 5 minutes. Unless you guys have some more, please throw them out there or upvote any that you want us to try to address. So Stacy, a great question and a good one for if we do know anybody who hasn't applied. If we previously felt like we could slug through this and had money to be able to cover payroll and didn't apply, what's our feeling now? There was some hesitation there for a little while of, it has to be very dire, and some people really held back. But what was the general theme of people applying now?
So here's where we look at that amount of the loan. If we're over 2 million, you've got some pretty stringent standards to look at. You want to make sure you have your impact statement documented and have all of the financial information to support why you needed it. And under 2 million, they really loosened it up. They wanted, for any business that's got this economic uncertainty during this COVID-19 time and are having trouble, maybe cash flows dwindling, your pipeline's looking small, the orders aren't coming in, yet you have made really good business decisions and built up that cash in your bank account and saved a ton. Yes, you are able to pay your payroll, but that's not what this program's for. This program then wants to make sure it's stepping in, getting you that loan so that you are paying your employees and still able to, once we come out of this COVID time, just hit the ground running and hopefully make up what we've lost in these months that we have been going through. I hope that's helpful. If you have specific questions, feel free. Any one of us on the team, shoot us an email or give us a call and we can talk through specifics with you. But yes, at this point, if you haven't applied and you have that uncertainty, do apply. You have till June 30th.
Perfect. So there's a couple different questions around this. Is if we apply for forgiveness at the end of our period and maybe the bank takes a couple weeks and the forgiveness actually happens in 2021, obviously, do we know anything about when that forgiveness would trigger, or what tax return it would be on, if you're accrual or cash, or are we just getting into the weeds?
Well, I think that's going to be more guidance that comes out for us. And that's where Chris said, let's just wait to do this until we know we have to get the tax return filed. By then we're going to know how to account for it. And I don't, planning wise, yes, we have to plan for that, but I wouldn't worry too much right now.
And
Yeah,
Chris has an opinion. I like it.
I
Yes.
would plan on that stuff being 2020. I mean, you can restore your FTE, but the PPP loan is covering costs that are paid in 2020. So none of your payroll from January 2021 is going to be considered.
Well,
they haven't
one
really
thing on that, Chris.
said, but I would figure this PPP loan forgiveness is going to be recorded in 2020. I would plan on that, but at the same time, the loan forgiveness itself is tax-free. So.
And that question was actually from a friend of Stacy, so I just told her to text you.
Excellent.
Yeah. Chris, actually, while you're on, it's a great question around commissions, which also ties into tips and a few other different things. If a commission, in this case, a stylist, is making the same commission rate, but servicing less people, so probably taking less home, less commissions, is that a wage reduction?
We're not really sure. And this is sort of the disappointing part, that they have said very little about the wage reduction limitation. I think by the time you're done going through it for these commission people, they're going to have a period in 2019 that was high and probably disqualifies them. And also, they just need to get restored back to their same level of commission before the end of the calendar year. So if they are able to service a similar number of customers and they have a good week, then they will have been restored. And so you'll get covered that way. So unfortunately, that's about all we know for sure. There's just not a ton about the specifics, but I would anticipate that you're okay, because you haven't changed the terms of their employment. I mean, that's the whole idea, is that you're supposed to keep people on. You're not supposed to slash their hourly rate or their salary or their commission percentage. So I would just focus on that. You've held up your end of the bargain. And if they end up with a little bit less commissions, I mean, it would also need to exceed a 25% drop in their commissions. So I think by the time you're done sorting through all of those exceptions, I think most of the time people are going to be all right.
Awesome. So we actually caught up and we cleared all of our open questions that I believe we had. There were a few that were submitted beforehand that I'm fairly certain we caught, and I'm just doing one last double check, but I do think so. Yeah, I think we're all right. Stace or Chris, I'm not sure, whoever, you just want to do a quick wrap up and say goodbye?
Well, I hate to say goodbye. I'll miss you all. I have a fun fact. So what I did while I was waiting to get called back in to chat at all of you, looked through the attendees, because it warms my heart to see all the names I know. But I thought you'd like to know the winner in the number of people that are named Jim. So hi, Jim. I'm hitting a lot of you. We had a lot of Jims today. I thought that was pretty funny. It was a big section of Jims as I scrolled through. So there's a little fun fact. But again, we're here. And we don't leave our emails and phone numbers up forever just because we want you to have it. We really want you to reach out. Each one of us that's on this list is glad to help and guide you through this. And if you're working with another accountant here at the firm, same thing, reach out to them. They'll connect you with us. So we want you to know we're here to support you through this, and hoping that this webinar also helped give you a little bit more kind of breath of relief again, you know, that it doesn't have to be something you're losing sleep over, and they really want it to be forgiven. They want you to use this for your employees and not be paying it back. So that's, I guess, my closing thoughts is let's help you through this and have 100% forgiven. And again, thank you for being with us. We appreciate it. Any final thoughts, Chris?
No, maybe just that as we've been talking, we think there's maybe one more of these webinars that we'll need to do as we get a lot more of the guidance. But really, I think we're in good shape now. We've got the forgiveness applications. We've got a lot of the questions answered. Not that we need to charge forward and do these applications tomorrow, sort of the opposite. We've got plenty of time to do these applications. We really think people are in line for 100% most of the time. And so I think we're in a good spot. So I would look for probably another one as we get a little bit more information, but we're potentially nearing the end of this PPP saga, which is welcome relief for some of us, I know. So
Amen. With that, enjoy the summer. Looks like we have about 10 days of some hot summer weather. So I hope you can get out and enjoy it. Thank you, everybody.
Bye, everyone.
Bye,
Bye-bye.
everybody.